Thanks. So, yes, we are recording. Everything is good. Anyway, it has been one crazy day, hasn't it? So this is a Monday, April 7th, third day of craziness. And I mean, you can see here on the capital flow chart on the ES, this is just, yeah, well, this is what it is. Crazy stuff. Nothing is showing up on this chart right now, but it is, uh, oops, let me do this. It is pretty darn gnarly in terms of how this whole thing is developing. So at this point, I'm going to do, I was sure this is going on with that thing. Yeah, this, I had to rebuild my capital flow chart. It's not working well either. So the capital, the exchange member chart has to give you the picture. This is Friday's close. We are trading right at the close was Friday. So this gap down we had at the open, the gap down, and I can keep scrolling down here and you'll see how crazy that is. The gap down we had, this is overnight. This is the gap. So you can do this on the profile. You can go in here and you can turn off the centering, disable centering, so it doesn't keep snapping back on you. But you can, the big gap down here to the 49.80s, and then just kept going south. We were all the way down here to the 48. There you have it, 48.40s, 30s, 40s. That's how far they went. And then we have been going back and forth at the open, a bunch of slop, and then finally we started retracing back up again. So it is just a flat out crazy day, and you're gonna turn back on the centering, enable the centering again. It's gonna snap back. So we at this point just kind of sitting on the sidelines and waiting for this craziness to slow down. It has pretty much it is keeping up now in terms of processing price feeds. So it's kind of keeping up on that part, but it's still pretty darn volatile. And if you look at these bars here, look at these bars going back and forth. They don't look like much, right? But this little bar, the baby bar here, that is 60 to 76. So that's 16 points, that little bar. These other bars are like 50 to 80, it's like 15 plus point bars. Don't trade it. Stay out of it. Just sit on the sidelines until this crazy stuff starts slowing down. Then you have a shot at potentially doing something with it. But there's no point in trying to engage this market at this point. There's too many headlines. And if you click in a trade and you manage to time an algo putting on a bunch of volume, you're just going to get crushed. So I would just say stay range bound. I would stay on the short side of this. I would favor the short side if you're going to trade it. But as I said, I'm not trading this market. We are back to the mean, and that's a good sign. So going sideways right now. There's some press conference going on right now with I think Israel with the Israelis. So but I'm not thinking that's not really moving anything right now. So news this morning was pretty much anemic. No news really to drive the market. Tomorrow morning we have a small business optimism index, but it's going to be all dominated by the tariffs. So all tariffs, same kind of stuff. Look out for potential margin changes from your broker if they send something out. If they drop those down again, in terms of that's going to be your best guess as to when volatility slows down, when they start dropping their margins. And if they don't, just sit on the sidelines. There's absolutely no reason to engage this market the way it is right now. It is a recipe for getting yourself in trouble, and I would not recommend it. So that's the ES. They're back to the mean, so they're back right at this, right at the close of Friday. So that's actually pretty good, a good sign in considering. So we are not completely falling out of bed this day, even though we gapped down at the open, we retraced most of it. So we're up pretty good, but pretty much holding steady from Friday. Looking at the bonds and the NASDAQ, and you can see bond market, it has been tradable today, but still pretty volatile. They're right back here to this attract at 1720s right at this point. And I would just be looking at this guy as a, let me see, my capital flow and my bond F1 is still calculating. So I'm going to rebuild this whole thing after the overnight stuff is running. So this processing backfill ticks in a day like this is absolutely crazy. But bond market way down, and that's an interesting one. So yields coming up pretty hard, and that is a little bit surprising, I had to say. I'm not sure I'm seeing the buying interest right now just yet that people are rolling out of the flight to safety and into some sort of a risk on kind of mode, but the yields are way down. So that's a kind of an interesting dynamic, I think. Not quite sure what to make out of it, but it's not if it was the free flight to safety right now, I think most people who fled to safety are in bonds already. So I think this repricing is interesting, but yields coming up, and I think that could be a reason. The reason for that may be more inflation fears. Now, inflation can be caused by these tariffs. That's anyone's guess, right? There's so many factors driving this at this point. It's hard to make those assessment, though. A bond market trading lower, yields coming up would most likely be related to an inflation fear or inflation fears. There's a lot of people speculating at it. Trust me, a lot of people out there speculating left and right on what is valid and what's not. And I will take all that stuff with a big grain of salt. No one really quite knows how to deal with this. On the Nasdaq, way down, gap down Friday. We closed Friday, so actually above the gap down on Friday. So we're making some progress on the Nasdaq, though we have done in some shitty territory. So we are way down, and I would start range bound with a bias to the downside still. If you're trading it, and that would be a big if. Watch that level up here at the 17.8s. If they start trading above that, maybe have a shot at retracement, but. As I said, it's too volatile. This big pop we had, the same on the ES, the massive pop to the upside was all related to that headline we got earlier on today, and then that absolutely got promptly reversed as well. So I wouldn't be very aggressive on trading either ES or the Nasdaq right now. But if you are trading it, trade it from the short side primarily. And then finally, oil and gold. Gold has been reasonably tradable. They're back up again to 3,000, so they're not completely out of whack, you know. Let me see, gold is back up here at the, gold is back up here above that 3,000 level. So that's a pretty good move. And you look at capital flow on gold, that's not bad the way this is developing. So 29.85 is below that one. I would be concerned about them running it down to the 2900s, but they backed off the 3150s all the way down here to 3,000, so they're off pretty good. And the fact that gold is down like this is also kind of surprising, right? You would think that with this craziness, people would keep gold prices high. But it could be that people bought ahead and there's a sell by the rumor, sell the fact kind of stuff. Could be that that's what's going on with that. Anyway, so gold, watch it. If they keep trading below the 3,000, I would be looking at moves to the downside. If not, I would stay range bound. And then finally, oil. Big moves on oil as well. They were way up. They were way down. They were way up at the news and then back down again to 61. So global fears of recession, obviously driving down demand of oil in a big way. And that's so the fact that people are predicting recessions and they fear this and fear that and all that stuff, it's doom and gloom. And that is interesting how it drives the markets. But no one really quite knows about it. So I would just take that with a big grain of salt as to what really goes on with that thing and what really is going to come out of it. Right now, I think the prices on the downside is all related to recession fears. Same as the bond prices going down is related to fear of inflation. But then again, it's way too early. It's like a few days into it, and people they tend to predict doom and gloom and all sorts of things. So. But anyway, we'll leave it there for now, guys, and I will see you back at bright and early in the morning to see how crazy it gets in overnight. But as I said, I'm staying out of it until things start calming down, and then we get into more of a tradable market where we can actually manage this in a better way. All right, guys, we'll leave it there, and I'll see you back tomorrow. Later.